Bismillahirrahmanirrahim. This is the third video on acquisition costs of unproved property under successful efforts method, and we will continue talking about disposition of capitalized cost. In this video, we are going to talk about surrender or abandonment of significant and insignificant properties. We are also going to talk about partial abandonment of property. We will talk about post balance sheet events and reclassification of significant and insignificant properties and partial reclassification. We will be solving exercises for each of the topics discussed in this video, and in the end, one exercise will be solved on impairment of unproved property on a request of few subscribers. Please like, subscribe and share my channel to search for accounting lessons and hit the notification bell button to alert you for the latest video. For all of your questions, comments and suggestions, please put them in the comment section below, and for webinar and guest speaker invites, please send me a message at accountingamir@gmail.com. Accounting is AK. We hope that this video help students in their academic development and teachers in enhancing their lesson plans and teaching methodologies. We also hope that this video help fresh graduates who have joined the oil and gas companies and want to refresh their learning on surrender or abandonment of significant and insignificant properties and partial abandonment of property, post balance sheet events and reclassification of significant and insignificant properties and partial reclassification under successful efforts method. So let us start with the concept of abandonment of property. Unproved property can be abandoned due to several reasons like failure to pay a delay rental payment, failure to begin drilling or production operations before the end of the primary term. Another reason may be to establish worthlessness for tax purposes. Unproved properties may be significant or insignificant, we have already talked about in the past. And if a significant unproved property is surrendered or abandoned, its capitalized acquisition cost should be charged against the related allowance for impairment account. Such abandonments result in the net carrying value, that is acquisition cost minus the impairment allowance, and is expensed. If the allowance account is inadequate, the excess should be charged to surrendered lease expense. In case of individual insignificant unproved properties that is assessed on a group basis is abandoned, the cost of the unproved property being abandoned should be charged against the allowance for impairment account group basis. The allowance account should be adequate. However, in case the allowance is inadequate, the excess of the abandoned property cost over the allowance balance results in a debit balance in the allowance account. In such case, the debit balance of allowance account should be charged to surrendered lease expense and an appropriate accrual made so that a sufficient allowance balance is established. Let us solve an exercise on abandonment of significant properties. Lucky Company abandoned the following unproved properties, all assessed individually, so that means they are significant properties. We have lease A, B and C. So for lease A, The journal entry will be allowance for impairment debit, and this will be debit by 50,000, and unproved property will be credit by 50,000. For lease B, uh, impairment allowance is only 20,000 and we have abandoned the whole property. So first of all, allowance for impairment will be debit. Let me put it as lease B first of all. So allowance for impairment will be debit, and this will be debit by 20,000, and the balance will be recorded under surrendered lease expense. So 80 minus 20 is 60,000, and unproved property will be credit by 80,000. You can just make a note that if the allowance account is inadequate, then the excess should be charged to surrendered lease expense. We go to lease C, and there is no impairment allowance, so the whole amount will be charged to surrendered lease expense. This will be debit by 70,000, and unproved property will be credit by 70,000. Let us solve one more illustration on significant properties that is abandoned. Now, Frank Oil Company acquired the following three explored leases. All the leases are classified as individually significant. On December 31, 2018, lease A is determined to be 40% impaired. Lease B and C are not impaired. So we are required to prepare the journal entries except the initial purchase. So we will not go for the initial purchase. For part A, first of all, for lease A, there is a lease impairment of 40%. So lease impairment expense, and this is going to be for lease A, is debit, and allowance for impairment, and again don't forget to write down lease A because there are three different leases, and this is 40% of 400,000, so that makes 160,000. Then we go to number B. On December 31, 2019, lease A is determined to be impaired a total of 70%, and lease C 60%. Lease B is not impaired. Now this is interesting, and let us see how we go for it. Obviously, first we go for the lease impairment expense. So lease impairment expense, and this will be for lease A, will be debit, and the total is 70%, and we have already impaired 40% in the year 2018. So the balance will be 30% of 400,000, that will be 120,000. And allowance for impairment lease A will be credited by 120,000. Then for lease C, the impairment is 60%. Now there was no impairment for lease C in the year 2018. So obviously the lease impairment expense for lease C is debit, and this will be debit by 60% of 300,000, that makes 180,000. And allowance for impairment lease C is credited by 180,000. Then we go to C now. On December 31, 2020, lease A is considered to be 100% impaired. Now, it is 100% impaired. That means we have already impaired 40%. The total impairment was 70% for lease A so far. That means the remaining is going to be 30%. So, the surrendered lease expense will be in the 700 minus 70, that is 30%, and 30% will be, this is lease A, will be debit by 120,000, and allowance will be debit now. This is abundant, so allowance for impairment lease A is debit, and you can see allowance was 160,000, and we have 120,000, that makes 280,000. So surrendered lease was 120,000. Lease A was debit by 180 plus 120, that is 160 plus 120, that is 280,000. And this will be unproved property will be credited by the whole amount of 400,000. Then this was for lease A. And for lease B, they are impairing 30% is going to be impaired now. So lease lease impairment expense, and that is lease B, is debit by 30% of 200,000, that makes 60,000. And allowance for impairment lease B will be credited by 60,000. Then we go to and a well on lease C found proved reserves. So now here we are finding the proved reserves for lease C. So we are going to debit now proved reserves approved property unproved property will be debit. And if you can remember, for part C, we have allowance for impairment was 180 before. It was 180 for lease C. So the proof property will be the difference, 300 minus 180, that is 120,000. So proof property is debit by 120,000 and allowance will be debit now. Allowance for impairment lease C is debit by 180,000 and unproved property will be credit by 300,000. So that's how we solve this exercise. Next, let us solve an illustration on insignificant properties. During December, Lucky Company abandoned two unproved leases that has been assessed on a group basis. So that is insignificant properties. Being near the end of the year, the impairment allowance for individually insignificant properties had only a 30,000 balance. Data for the abandoned lease are as follows. So they are abandoning it. So we go first of all for lease D, and we are abandoning, so allowance for impairment group basis is debit by 10,000 and unproved property is credit by 10,000. Then we have lease E. Again, the allowance for impairment group basis is debit and unproved property is credit by 25,000. Now I would like to show you how the allowance account will look like. So if we prepare the allowance, we have 30,000 and from this 10,000 is debit for lease D and 25,000 for lease E. And now you can see that we are having a debit balance and we cannot have a debit balance for the allowance. So we are going to debit surrendered lease expense will be debit by 5,000 and allowance for impairment group basis is credit by 5,000. Let us solve another illustration on insignificant properties. Now Maxwell Oil Company, oil and gas company, owned the following unproved property as of the end of 2019. Now we have both. We have significant properties and we have insignificant properties. Although no activity took place on lease A during the year, Maxwell decides that lease A was not impaired because there were still 3 years left in that lease's primary term. Two dry holes were drilled in lease B during the year. However, since Maxwell intended to drill one more well on lease B in the coming year, it decides that the lease B was only 40% impaired. With respect to the individually insignificant leases, past experience indicate that 70% of all unproved properties assessed on a group basis will eventually be abandoned. Maxwell's policy is to provide at year end an allowance equal to 70% of the gross cost of these properties. The allowance account had a balance of 20,000 and we have to record impairment only. So we start with lease A, and for lease A there will be no entry because there is no impairment. For lease B they are impairing 40%. So again lease impairment expense is debit, and this is debit by 160,000, and allowance for impairment will be credited by 160,000 because they are impairing 40% of 400,000. Regarding the insignificant properties, they are impairing 70%. So for this we have to look into the lease impairment expense, and for this let us make the allowance account first of all. And for the allowance account we are having 70% of 145. So the balance that we need is 70% of 145, that is 101,500. We have a balance of 20,000. So the balancing figure will be 81,500, and this is the amount to be impaired. So lease impairment account, lease impairment expense will be debit by 81,500 and allowance for impairment group basis will be credited by 81,500. Next, let us talk about partial abandonment of property. Now, in case the lessee has international operations, then such contracts will cover large geographical areas, and the company may surrender a part of the property while retaining the remaining land. So any acreage that is no longer of interest over the exploration period should be relinquished, that is, they should be given up from the contract. And here is an example for that. Lucky Company entered into a concession agreement with the government of China covering two 5,000-acre blocks. The contract stipulated that Lucky Company must relinquish 20% of the acreage at the end of 3 years. The original bonus was 5 million. At the end of the third year, Lucky surrendered 2,000 acres and continued to evaluate the remaining 8,000. So again we have the surrendered lease expense is debit, and this will be 20% of 5 million, and 20% of 5 million will be 1 million, and unproved property will be credit by 1 million. Let us solve another illustration on partial abandonment. Duncan Corporation leased 3,000 unexplored acres, paying a lease bonus of 160 per acre. Delay rentals are specified at a rate of 4 per acre. The lease also specified that Duncan Corporation could abandon the lease in 1,000 acres of portion. At the end of year 1, Duncan Corporation abandoned 2,000 acres and paid a delay rental for the remainder. Prepare general entries for the above activities. So first of all, we have a bonus of 160 on 3,000. So unproved unproved property will be debit. This is acquisition is debit. 160 times 3, that is 480,000, and cash will be credit by 480,000. So this will be the first transaction. Then in the second, they are abandoning 2,000, that means 2/3. So because the total land is 3,000 acres and they are abandoning 2,000, so the surrendered lease expense will be debit, and this will be debit by 2/3 of 480. That will be how much? 140, that will be 320,000. And unproved property will be credit by 320,000. Then they are going to pay the delay rental on the remainder. So we have surrendered 2,000, that means the remaining is 1,000, and they are going to pay at the rate of 4 per acre. So delay rental expense will be debit by 4,000, and cash will be credit by 4,000. Next, let us solve another illustration on partial abandonment. And Kincaid Oil Company's balance sheet at 2018 included unproved property account balance as follows. We have lease A, B, and C. These are the cost, and there are the impairments. Individual during 2019, there are significant properties and there is a insignificant properties as well. The following events related to the above unproved properties occurred. Lease A is abandoned. So if the lease A is abandoned, surrendered lease expense is debit by lease A is abandoned. So the total amount is 50, allowance is 10. That means the difference of 40,000 is the surrendered lease expense. Then we have allowance for impairment, and this is debit by 10,000, and unproved property is credit by 50,000. Then we go to number B. Lease B is surrendered. Now for lease B we have allowance for impairment debit for 20,000 and the balance will be surrendered lease expense will be debit by 60,000, 80 minus 20, and unproved property will be credit by 80,000. We go to for number C now. Lease G and F individually insignificant in the amount of 4,500 and 3,000 respectively are abandoned. So we go for number C. Allowance for impairment will be debit and this will be group. These are insignificant with this debit, and force that is 7,500 and unproved property G is credit by 4,500 and unproved property F is credit by 3,000. Next, let us solve another illustration on partial abandonment and give the entry to record abandonment in each of the following cases. Universal Energy Company abandoned an unproved property that cost 300,000. The property was considered significant and has been impaired 100,000 on an individual basis. So the first one will be again the surrendered lease expense will be debit, and because we have an allowance of 1,000, it means the difference is 200,000 will be debit, and allowance for impairment will be debit again for 100,000, and unproved property will be credit by 300,000. We go to B. Universal also abandoned an unproved property that was not considered individually significant. The property cost 25,000 and the group allowance account had a balance of 320,000 at the time of abandonment. So obviously the whole can be allocated to allowance. So allowance for impairment group will be debit by 25,000 and unproved property will be credit by 25,000. Next, let us talk about post balance sheet events. So interim period is the period after the balance sheet date but before the financial statements are issued. So some information may be available during this interim period and should be taken into account in evaluating the conditions that existed at the balance sheet date, like assessing unproved property or in determining whether an exploratory or exploratory stratigraphic test well was found, or proved reserves or a dry hole completed during the interim period, that may indicate that the lease was impaired at the year end. Any impairment amount should be reflected in the financial statement at the fiscal year end by making an adjusting entry recognizing impairment. So let us solve an illustration on adjusting entry in this regard. Lucky Company has unproved property cost on lease A of 120,000 at December 31, 2007. During January 18, 2008, prior to the issuance of the audited financial statement, a well on an adjacent lease owned by another party was determined to be dry. No impairment on lease A has been taken on December 31, 2007. Due to the dry hole on the adjacent property, management now estimates that lease A was impaired 60% at December 31, 2007. So again, this is an impairment expense. So impairment expense, that is debit, and this is 60% of 12,000, that is debit by 7,200, and allowance for impairment will be credited by 7,200. Let us talk about reclassification of an unproved property. And now, when proved reserves are discovered on an unproved or undeveloped property, the property should be reclassified from an unproved property to a proved property. For a property that has been assessed individually, the net carrying value should be transferred to proved reserve, and let us see how we do that. Lucky Company discovered a proved reserves on the following unproved properties: lease A and B. There was no impairment allowance for lease A. For lease B, there was impairment of 25. So let us first of all talk about lease A. And for lease A, proved property is debit, as unproved will be reclassified as a proved property, and unproved property will be credited by 150,000. For lease B, we have proved property is debit, and this is debit by because there is an allowance of 25,000. So proved property will be debit by 75. 100 minus 25, and then allowance for impairment will be debit by 25,000, and unproved property will be credited by 100,000. So for a property that is assessed on a group basis, the gross acquisition cost of the property should be transferred when reclassifying the property, as the net carrying value cannot be determined on a separate property basis for properties that are assessed on group basis. Next, let us look into an illustration on property assessed on a group basis. Lucky Company discovered proved reserves on a lease that has been assessed on a group basis. The acquisition cost of the property was 30,000, and the impairment allowance for individually insignificant properties had a balance of 200,000. So first of all, proved property will be debit. by 30,000 and unproved property will be credited by 30,000. So for a property to be proved, it is not necessary that the entire property be classified as a proved area. Only that proved reserves are found on the property. A small portion of a proved property may be a proved property. As a company explores and drills wells in the contract area, some acreage may become proven. Other acreage may be retained for future evaluation, and still other acreage may be relinquished, as the case may be. And this situation may also occur in the exploration of certain offshore properties whose evaluation require multiple wells. Next, let us solve an example on partial reclassification. A Lucky Company has an offshore lease with the federal government that cost 20 million. This lease covers 4 tracts of 6,400 acres each. Proved reserves are found on one tract. Management decides to reclassify only one tract. So once again we have proved property is debit, and there are 4 tracks, one is already there, so 1/4 of 20 million will be 5 million, and unproved property will be credited by 5 million. Let us solve one more exercise on partial reclassification. Placid Oil Corporation purchased an offshore lease costing 3 million with 5,000 total acres. Proved reserves are found on a 1,000 acre tract that is included in the 5,000 acres. Management decides to reclassify only the proved area acreage. So prepare the entry to reclassify the acreage. So once again we have proved property debit, and this will be 1/5 of 3 million, and that will be equal to 600,000, and unproved property is credit by 600,000. Let us solve one more exercise on reclassification of significant and insignificant properties. As of 31st December 2018, Bruno Energy Corporation owned the following unproved properties. We have significant properties and we have insignificant properties, and they have found proved reserves for lease A and B. So there are proved reserves, and you can see that for significant properties there are allowances as well. So first of all, for lease A, proved property will be debit, and allowance was 200. That means this will be debit by 150,000. 350 minus 200, and allowance for impairment will be debit by 200,000, and unproved property will be credited by 350,000. Then we have lease B, and for lease B we have the unproved property of 600, and we just follow the same general entry. We have proved property 600 minus 250, that is 350,000, and allowance for impairment is debit by 250, and unproved property is credit by 600,000. Then, so this is about A, and we go for part B now. For found proved reserves on lease D, and lease D is for 30,000. So proved property, and now we have to write down lease D is debit by 30,000, and unproved property is credit by 30,000. We go to number C, and for number C, found proved reserves on lease C, and again for lease C we have 120, so proved property lease C is debit, and unproved property is credit by 12,000. Okay. Now I am adding one exercise on impairment of unproved property, as I have received a request from some of the subscribers, and there is a small correction over here, and this is not impairment but rather this is reclassification. This is a reclassification, and this will be reclassification. I'm sorry for this mistake. This should be reclassification of unproved properties. Okay, we move on to so as I say that I have added one exercise on impairment of unproved property, as I have received requests from some of the subscribers. So we have impairment of insignificant properties grouped by state. So Upbeat Corporation impairs individually insignificant properties on a group basis. Upbeat has the following groups of individually insignificant leases. We have total cost, we have the allowances, we have the expected average percentage of impairments. So first of all, we are going to look into the amount needed in the allowance account, and this will be 60% of 200, and that is 120,000. 7 3s are 21, that is 210,000, and 65% of 400,000, sorry, that is 260,000. Then we have the allowance amount of 40,000. There is no allowance here for B, and we have 80,000 for C. So the amount to increase the allowance will be 80,000, 210,000, and 180,000. And the journal entries to record the impairment will be like these. First of all, we have lease impairment expense, group A is debit, by 80,000 and allowance for impairment, this is insignificant property, so group basis, that is group A, is 80,000. Then the second journal entry will be the same, lease impairment expense. Now this is group B is debit, and this is debit by 210,000, and allowance for impairment group B is credit by 210,000. The third will be lease impairment expense group C will be debit by 180,000, and allowance for impairment group C is credit by 180,000. So this completes the third part on acquisition cost of unproved property under successful efforts method. I hope you have enjoyed this presentation, and if you found value in this video, then please like, subscribe and share my channel and hit the notification bell button to alert you for the latest video. And one last thing before I go, if you have any questions for suggestions for future topics or any feedback, please put them in the comment section below. And for webinar and guest speaker invites, please send me a message at accountingamir@gmail.com. Remember, effective questioning brings insight, which fuels curiosity, which cultivates wisdom. If you have any question regarding this session, then please don't hesitate to ask in the comment box or by email, and inshallah I will reply you back. Thank you so much and happy learning.